On Main Street, alternative fuel production pumps up election year rhetoric. In the field, harvest swings into high gear, but the government is concerned about the dust. And on the front porch, an innovative operation helps consumers support their local farmer. Those stories and more next.
Funding for Market to Market is provided by Pioneer Hybrid, because sound information plus consistent yields can help farmers stay on track. The people who bring you Pioneer brand corn hybrids proudly support Market to Market.
Wells Fargo Financial Leasing, a proud sponsor of Market to Market. For almost 30 years, Wells Fargo Financial Leasing has been committed to offering local communities lease and loan financing solutions.
This is the Friday, October 6th edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mark Pearson. Wall Street took a giant step this week in its recovery from nearly 7 years of turmoil. On Tuesday, the Dow Jones Industrials closed at a record high for the first time since January of 2000. Analysts credit growing optimism that the Fed might begin lowering interest rates soon as a key contributor to the rally. That sentiment seems plausible. The Dow virtually ignored a bearish factory orders report released Wednesday on its way to 3 consecutive record closes this week. But the rally short-circuited on Friday when the government issued a weaker than expected jobs report. Americans will receive one more snapshot of the labor market just days before the midterm elections. And as voters head for the polls, their decisions are likely to be shaped in large part by their pocketbooks. While declining oil prices also played a role in this week's rally, voters still are concerned about higher fuel prices. And with politicians pumping their own brands of renewable rhetoric, alternative fuel production is emerging as an election issue. Nowhere is the issue more prominent than in Iowa, the nation's top producer of ethanol. While some states are ramping up the call for increased use of 10% blend ethanol, candidates for Iowa's governorship are setting their sights at E85.
Let's manufacture the flex fuel, the alternative pumps in Iowa, the E85 pumps, the biodiesel pumps. That's a great opportunity for our state.
My Iowa Energy Plan, which I put out last year about this time, ahead of everybody else, is because I wanted to get E85 pumps in these gas stations.
But while the corn stalk and flex fuel talk are flying in the Hawkeye State, many other political races are heating up in Missouri, Illinois, Wisconsin, Colorado, and Minnesota. Lawmakers in farm country aren't the only ones jumping on the biofuels bandwagon. This week, former CIA Director James Woolsey urged the federal government to put less focus on subsidies for corn producers and more attention towards cellulosic ethanol. Woolsey claimed that with the expansion of cellulosic ethanol, the U.S. could replace 25% of oil imports. Woolsey estimated that would create earnings of $80 million and double net farm income. Despite the lofty predictions over alternative fuels, questions remain over how much domestic ethanol U.S. farmers can supply. Since January, the U.S. government has imported 343 million gallons of ethanol from Brazil, making America the #1 purchaser of Brazilian ethanol. While it may be a bit early to refer to recent warmer-than-normal temperatures as Indian summer weather, conditions this week in much of the grain belt helped the harvest kick into high gear. But new EPA guidelines on dust and particulate matter announced recently could have legal ramifications for farmers. Senator Charles Grassley of Iowa is concerned the new rules could expose farmers to litigation. And he invited the head of the EPA to visit his state during the harvest to see how the new rules would affect America's farmers. Last week, the Environmental Protection Agency, or EPA, made a decision to stop exempting farmers and ranchers from dust and coarse particulate matter regulations. The EPA's original proposal in December 2005 included an exemption for sources of dust created from agricultural and mining practices. Despite an EPA statement that the health risks of exposure to particulate matter in rural areas are inconclusive, the agricultural and mining exemptions were removed from the final regulation last month. Officials with the EPA and the Iowa Department of Natural Resources insist farmers won't be affected by the decision. But Senator Charles Grassley, a Republican from Iowa, disagrees. He says there is no guarantee that farmers couldn't be sued for the dust they create. This week, he invited the EPA to visit his state to see firsthand what the new rules could do to American farmers. Grassley asked the EPA to make the trip before the soybean harvest ends, noting soybeans stir up more dust than corn. While the administrator of the EPA, Stephen Johnson, accepted Grassley's invitation, no date has been set for a visit.
American agriculture, and for that matter, the entire food chain, has changed dramatically over the past 50 years. Much of the revolution has been driven by consolidation of ever larger food production and distribution systems. Amidst the din of today's industrial operations, though, are smaller scale producers and consumers seeking locally grown food. One method of connecting customers and growers is known as community-supported agriculture. The operations unite growers and consumers to share the risks and benefits of food production. As Sarah Frasher discovered earlier this year, the operations provide a unique opportunity for consumers to support their local farmer.
I had somebody recently ask me, do you consider yourself a farmer? It's like, well, yeah. I do. I mean, when you think about, when it comes down to the basic, what is a farmer? It's someone who grows a food or a fiber product for commercial basis.
Angela Tedesco grows produce commercially on 20 acres with several employees. But her relationship with her customers is a little different. Tedesco's customers are called members, subscribing and paying in advance for a share of Turtle Farm's bounty each year. If weather or insects destroy a crop, the members don't get that crop. In short, the member shares the risk with the farmer.
I always tell my customers, every year I'm probably going to lose a crop or two. I don't always know which one it's going to be. I lose crops more to weeds than I do to insects. And so it's an adventure. Every year is an adventure. You have to look at it that way.
It's called community-supported agriculture, known as CSA. Tedesco's adventure in this alternative to the conventional food delivery system began 11 years ago. Located just outside the Des Moines, Iowa metro area, only 5 or 6 of her 20 acres are under cultivation each year. But they produce over 30 crops, mainly vegetables and berries. That means a lot of management, planning a sequence of crops. Everything is grown organically, and that means a lot of manual work, like hoeing by hand to get rid of weeds. Turtle Farm's 130 members pay $400 a year to receive a box of vegetables and berries in season for 19 to 20 weeks. And some members do work for their share. With the proceeds, Tedesco is paying off the land and built a small barn, also used as a summer food stand. Like many so-called traditional farmers, she has off-farm income from her husband's job. But it's not just about money for the farmer or farm member.
I like to say that people are taking back responsibility for their food system. They've kind of turned it over to corporations to grow their food, because we've got busy doing other things, and I think we're realizing that we're missing something there, and we're taking responsibility by supporting people like me that are growing for the local market, growing good food, taking care of the land and how it's grown, and recreating the spirit in food maybe then.
And it's 200, so we still need another 100 at least, so.
The first 2 American CSAs started in the Northeast in the mid-1980s. Today, it's hard to say for sure how many there are. The USDA doesn't count CSAs for its census. There are only self-reporting listings at USDA and elsewhere. A 2005 survey by the National Center for Appropriate Technology put the number around 1,100. Whatever the number, CSA practices can vary significantly, from members doing all the work to members only getting the box of food to any variation in between. Some CSA farmers find other additional outlets to sell their produce. They can be certified organic or not.
Help me with these.
But it's not just about food either, for the farmer or the member.
It's about, a lot of people are looking for a connection to the land. And this is one way they can do that. They can come out, this could be their farm. They can come out and visit anytime they want. We can have social events out here if they want. Some of my customers' kids get excited and they'll eat my vegetables because they know me as opposed to a vegetable they might get at a grocery store. So it's a really nice connection for people to have to where their food's coming from.
On specified days, Turtle Farm members pick their box up at the farm or at various drop sites in the Des Moines metro area. Rather than making a list and going to the grocery store, with the CSA, the food arrives and then you figure out what to do with it. That's why the weekly newsletter includes a recipe for those who might be unfamiliar with some of the items.
It's kind of like Christmas for me. Every week I never know what's going to be in the box, and so it's kind of fun to see what's there.
This year, Linda Hansen is splitting a box with someone else.
This is another fun part of picking up the box is the newsletter, because Angela is so articulate. When I read the newsletter, I feel like I'm just talking to her, and she's talking to us, because she talks about what goes on at the farm each week, and she talks about our workers. And the rain. Yeah. I think that's very important in remaining a member of the CSA, is feeling included, feeling like you're part of something, part of a community. Okay, and here's the part we're probably going to fight over is the asparagus.
Asparagus,
Do you like asparagus?
Cece Arnold wanted good food, and she wanted to do more than be a member. She has been hosting a drop site in her driveway since she signed on.
Here you go. We're here to grab it.
Thank you very much.
Anything special this week?
There's a social element to this too, because people come to my driveway every week and we share about what we've done with the food and swap recipes, and just they're my Tuesday friends. They're here every Tuesday. I can count on them, and it's a wonderful thing.
Hey, it matches you.
Pretty red.
Every member would probably tell a slightly different story, which is also partly what CSA is about, giving people choices, including the opportunity to live their convictions. CSAs are admittedly not for everyone, and they aren't about to replace the existing food delivery system. But they are an option for those who want fresh food that wasn't trucked 1,500 miles. People who, as the Japanese put it, want food with the farmer's face on it. For those farmers, it's another model for working on the land. For Market to Market, I'm Sarah Frasher.
Next, the Market to Market Report.
USDA will release its monthly crop production estimates next week, but private analysts already are calling for larger than expected crops. Informa Economics this week increased its estimates of U.S. corn, soybean, and cotton production. However, Informa cut its world wheat production numbers due to arid conditions in the southern hemisphere. But that's not to diminish Mother Nature's impact on domestic production. According to the National Climate Data Center, this summer was the second warmest in the continental U.S. since records began in 1895. Meanwhile, the National Weather Service Climate Prediction Center is predicting improvement across the Great Plains by December. But many soybean farmers in South Dakota have had too much rainfall in recent weeks. Farmers in some parts of the state are waiting for beans to dry up and mature before they can harvest. The estimated average yield for South Dakota soybeans is 34 bushels an acre, 2 bushels lower than last year. Despite recent rainfall, moderate to extreme drought conditions continue in about 40% of the country. The government will assess the weather's impact on crops next week when it releases its much-anticipated October crop production report. Tight global supplies and weather concerns overseas supported wheat prices this week. For the week, nearby wheat futures gained more than 20 cents, while the December corn contract was up 7 cents. Substantial short covering and heavy fund buying this week sparked a rally in the soybean pits. For the week, nearby soybeans gained more than 16 cents, and the October meal contract was up $4.20 a ton. Over the fiber market, the December cotton contract gave back last week's gains and then some, with the December contract losing $1.36. In livestock, the October live cattle contract was down 22 cents. Nearby feeder cattle lost more than a dime, but the October lean hog contract was nearly $1 higher. In the financials, COMEX gold lost $2.62 per ounce. Nearby crude oil prices fell $3.19, and the euro lost 79 basis points against the dollar. And the CRB index lost 3.5 points to close at 302.25. Here now, let us his insight on these and other trends with regular market analyst Virgil Robinson. Virgil, welcome back.
Thanks, Mark. Nice to be with you.
Well, good to have you with us. Virgil, let's talk about this wheat market. We just mentioned a big up week this week in wheat. Obviously, we knew last spring that we had big problems down the panhandle of Texas and through Oklahoma and certainly big parts of Kansas with this hard red wheat crop. That problem hasn't gone away, and now it's been exacerbated by problems elsewhere in the world, correct?
Exactly right, Mark. Australia has been a topic of debate here the last couple of weeks. And as you mentioned earlier, next Thursday, the 12th, the USDA and WASDE, World Ag Supply and Demand estimates, will be released. And Argentina, Australia, Canada, the Ukraine, as well as the U.S., will be those focal points of most importance, I think, in that wheat report, Mark. And again, as has been mentioned many times on your program, the common measurement of supply, the stocks-to-use ratio globally, as tight as it's been in 30 years, tight here in the U.S. as well. So that has underpinned values and kept wheat markets at a brisk pace here, Mark. I'd like to mention, however, a couple of things. Kansas City wheat futures, that hard red winter wheat contract, Mark, has really struggled the last few months every time it has approached about $5.25. And that appears to me, at least based on my observations of the chart, the technical aspect here, to be an area of substantial resistance. The deferred wheat futures contracts down there are at and above $5. I think they represent a good hedge here, Mark. Now, clearly the dynamics of this market are such that higher wheat values could emerge over the course of the next several months, and I'm fully aware of that. But some type of minimum price strategy where you take advantage of that $5 plus mark for hard red winter wheat futures, in my mind, is appealing. At some point, you can selectively come back in and buy an option or a vertical bull call spread or something and keep yourself in position should 3 or 4 or 5 months down the road we discover wheat values are worth infinitely more than $5.
Okay, so a good strategy for producers out there.
Hard red wheat, yeah.
On hard red. Virgil, what about soft red? Now, it's had a pretty good run here.
Yeah, it really has. And Chicago wheat futures are at an 11-year high. Made new contract highs this very week, Mark. Be pretty silly of me to suggest the trend of that market's down. It's certainly not. It's up. Now, there will be, in my opinion, very abrupt and very significant periods of weakness in that contract as the speculative community, as well as producers who are now looking forward, and with the wheat-corn, wheat-soybean spread at a high or level not seen since 1980, we're going to attract a fair amount of wheat acres here the next couple of years, Mark. So please be advised, those deferred contracts, much like we just discussed, offer, I think, attractive hedging opportunities. And again, for those who fear significantly higher prices 6 months from now, a simple option strategy, spending 30 cents in a market that potentially could be worth $1 or more, is a relatively good value in my opinion. The insurance premium, I think, is reasonable.
All right, let's talk about this corn market. And we're into the teeth of harvest. We have, and everything that we're hearing is by and large, for the most of the Corn Belt, seems to be very positive in terms of yields.
USDA report comes out, as you said, next week. But right now, corn producers staring at a futures market that actually moved up during the harvest season. Now, cash market, I'm sure there's been some weakness there, but this market's moving. Isn't this almost a contra-seasonal move in corn?
Oh, I think it is, Mark, although to this point, the pace of the U.S. harvest is behind last year, for example, and the 5-year average. An interesting market, Mark, and I think, again, traders are looking beyond the near term and focusing a great deal of their attention on the balance sheets or potential balance sheets of 2007, 2008, both of which have been discussed in detail on your program. I think, Mark, there's the likelihood, however, of some type of harvest decline as the degree of carry in the cash and the futures market in just the last few days has diminished. Mm-hmm. The return on storage, while still attractive, has in fact deteriorated. I think that is a signal to producers and growers that the market is in need of their product at present. Mm-hmm. And that wasn't the psychology as recently as a few short weeks ago. So I think producers in those areas where the basis has narrowed, while the harvest or soon-to-be harvest is just about to get into the gut slot, I think they should reward those markets with some grain. That ultimately will probably satisfy the short-term pipe, create something of a pullback in the futures market, at which point those who have procured little or nothing for 6 and 12 months beyond this date will have their opportunity. So I think the market is set here, Mark, for some type of retracement, both in the cash and in the futures as we get deeper into the U.S. harvest.
All right, let's talk about the soybeans. We're rolling along on that harvest too. Now, again, Virgil, it sounds like there will be fewer soybeans, at least in Brazil. Maybe that'll get picked up in Argentina. But as we look forward, it just seems like there's an awful lot of soybeans out there, and yet we're seeing an up move in Chicago this week.
And Mark, I think you've just touched on what the industry has become concerned about, and that is the prospect next season of significantly smaller acreage, U.S. acreage, in combination with what is projected to be a decline in Brazilian hectares this year, this season, of anywhere from 5 to 10%. So simultaneously, fewer Brazilian hectares, fewer U.S. acres, despite the fact we have a big supply on hand, the market has shifted its emphasis and its focus several months forward. And that, I think, is underpinning the market, in addition to the fact that processing margins remain attractive, although this week I did note, Mark, the board gross processing margin, which is representative, at least in my opinion, of cash processing margins, declined pretty significantly, which tells me next week one of two things must occur. Either beans are too high in relationship to products because of this big weekly adjustment, or vice versa. My guess tonight is that bean futures are probably too high. I would think that 575 area basis November futures will provide pretty significant resistance, and I anticipate some type of pullback in the futures market the next couple of weeks.
All right, what about the impact of these funds, all this new money coming in, Virgil?
Mark, very hard for me to quantify what that might mean short-term wise, but clearly it's been a factor. And it has in my opinion, the ability of accentuating price behaviors in a very short-term situation. I think that's been the case in some of our markets of late. All I can say is, to a producer, to a farmer, have some objectives in mind here and those distant futures contracts, because behavior from the likes of what we're describing here or talking about can push markets to those levels very, very quickly. And if you're preoccupied with harvest or other activities, you need to have resting orders above the market to try and capture some of that value, Mark, and those funds have a tendency to accentuate price
Real
movement.
quick, Virgil, cotton market under some pressure this week.
Yeah, it is. But again, Mark, let's not lose perspective. And October 12th, perhaps we'll get some new perspective. But at this point in time, the department is forecasting a year-over-year decline in U.S. inventory, a year-over-year decline in global inventory. That's not bearish in my opinion. I think the market has discounted some near-term disappointing movement and demand too deeply. I anticipate a recovery in cotton futures over the course of the next couple of months.
Okay, let's move over to livestock, Virgil. Fed cattle market first up, which again, we go into post-Labor Day, and there's always a lot of concern by cattlemen about what's going to happen in the final quarter this year. What's it look like so far this year as we head into the last quarter?
Well, there's a lot of beef, Mark, being produced. Beef production's up about 6% year over year. We know from the most recent cattle on feed report there are a lot of cattle on feed that'll be in the system over the course of the next several months, in addition to plenty of pork supply, U.S., Canadian. I think cattle producers, from a cash cattle perspective, can look forward to something in the mid to upper 80s, the balance of this year, maybe the upper 80s, perhaps $90 in the spring of 2007, which means futures contracts, Mark, above $90, Dece, Feb, April, and June, offer, in my opinion, some hedging or, at a minimum, putting some kind of put strategy together and creating some minimum price. And I think those opportunities will develop between now and, let's say, Thanksgiving, the Thanksgiving period.
Some opportunities in there. What about some opportunities for pork producers, Virgil?
Cash hog prices, I think, Mark, will remain in the mid to upper 40s the balance of this year. Hedging opportunities is defined by the futures market. Dece hog futures, $63 or higher. I'd use that as a hedging opportunity. April hog futures at 66 or higher, I would do the same. There's plenty of pork, Mark. Big kill this week, likely to continue to see 2 million head plus kills the balance of the fall. There's plenty of pork. Demand is terrific. Don't let me fool anyone on that aspect, but take advantage of $3 to $5 rallies in futures. Get some hedges on place for the next several months.
Very good. Virgil, thank you so much. Some great ideas as usual. That'll wrap up this edition of Market to Market. But if you'd like more information from Virgil on just where these markets may be headed, visit the Market Plus page at our Market to Market website. And of course, remember, you can download audio podcasts of our market analysis and Market Plus segments free of charge at our website. So be sure to join us again next week when we'll head out to the open range to ride on a wild horse roundup. Until then, thanks for watching. I'm Mark Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wells Fargo Financial Leasing, a proud sponsor of Market to Market. For almost 30 years, Wells Fargo Financial Leasing has been committed to offering local communities lease and loan financing solutions.
Funding for Market to Market is provided by Pioneer Hybrid, because sound information plus consistent yields can help farmers stay on track. The people who bring you Pioneer brand corn hybrids proudly support Market to Market.